Welcome to today's video where we're going to dive deep into Elliott wave count with AVAX. If you've been wondering whether we should buy, sell, or stand aside, well, you're in the right place. But before we dive deep into this, I just want to introduce you to my 4 Secrets Masterclass to help you take your trading to the next level. In here, you're going to learn how to use Elliott waves in conjunction with some other methodologies to identify the end of a trend to really maximize your profits. It's free, it's in the description below. Check it out, you'll get massive value. So now when we're diving into AVAX, also known as Avalanche, this is the price data, and in the blue lines, I've drawn the pretty obvious Elliott wave counts, and it's textbook. And I'm going to just hide the price action just so it becomes even cleaner and clearer. Because what we're going to do today is something called 2 degrees of wave counts. This, by the way, applies on the way up and on the way down. So right now, what we're seeing is crowd psychology playing out, buying and selling behavior, and it applies to all markets and all time frames. And typically, more often than not, markets move in 5s and 3s. And what we've got with AVAX is just textbook. Like, it doesn't get much cleaner than this. It's a nice 1, 2, 3, 4, 5 to the upside. After a 5-wave move, you should always anticipate a minimum of a 3-legged correction known as an A, B, C. And it happens more often than you would believe on all time frames. And now when I bring up the price action with AVAX, this is one of the questions I got asked on my weekly workshop. We do a live workshop where my community can ask me live questions, and someone asked me to take a look at AVAX. And when I looked, I was like, wow, this is textbook. Very, very textbook. So what we're going to do next is we're going to do something called a 2nd degree of wave count. Now, what that means in English is within these blue lines, there's waves within the waves. And why that's important is it can help us pinpoint the end of a micro trend and a major trend. And this is what I mean. I've drawn these already. I'm just going to pull them up on the chart. I've just got them over here. I'm going to pull them up. And this will make perfect sense to you as I cover them. So now I've kept them in red. And again, I'm just going to get rid of the price data just so it becomes a bit easier to see. But like magic, around 40-60% of the time, 40-60% of the time, these wave counts are very obvious, especially when you've done a bit of training. So in the blue line, this wave 3, this move to the upside, if you look closely, and I've drawn it out, and I'll bring back the price data in just a second, it looks like a very clean 1, 2, 3, 4, 5 of a wave 3. So we can see clearly, and if I just bring back the price data, hopefully you can see it. Sometimes people don't, if you're not used to looking at bars, it's not that obvious, but with time, it gets more and more obvious. Then with a wave 4, if we look over here, I'm just going to draw this out for you. It looks like a nice 3-wave correction for a wave 4. And then this wave 5 will help us identify the end of a trend. And if we focus on the red, it looks like initial wave 1 of wave 5, a wave 2 of wave 5, an impulsive 3 of wave 5, a 4 of wave 5, and then a 5 of wave 5. So when you get a 2-degree wave count, it makes it a higher probability that the market has come towards the end of a trend, and then we should anticipate some type of correction. Now, you do want to combine some other factors with Elliott wave, like momentum, Fibonacci price, and Fibonacci time. That's why I call it the 4 Secrets Masterclass, one of which is Elliott wave count, and ideally on minimum of at least 2 waves. So now what we're going to do with AVAX, but again, this applies to Bitcoin, Ethereum, Matic, Solana, other markets, whether it's the euro versus the dollar, whether it's gold, it applies because it's crowd psychology and it plays out like you wouldn't believe. And I found often, if this is new to you, sometimes it's a bit hard to get your head around. Like, can this be true that markets move in 5s and 3s? Well, let's just look at AVAX. Look at this 1, 2, 3, 4, 5 of an A. A wave B in the blue is typically broken down to 3 waves. And look at this, textbook A, B, C. That's a textbook ABC zigzag. And where are we right now? Literally right now as I'm recording this video, where it looks like we're in the typical zone of a wave C. But is the wave C breaking down to a 5-wave sequence? Because typically, more often than not, a wave A and a wave C break down to a 5-wave sequence. And if it does, it makes it a very high probability that we're coming towards the end of a potential wave C. And then we can ask ourselves the question, what needs to happen to confirm that low? What needs to happen almost on the immediate time scale, but also on the longer term time scale? And that's what we're going to break down here. But when I'm looking at AVAX and this potential wave C, and you'll see I got a question mark here because it hasn't been confirmed yet. It hasn't been confirmed yet. And by the way, these other lines are Fibonacci price, Fibonacci time. So we're in a price and time zone as well, but we're really paying special attention to Elliott wave counts. And it looks like we've got this initial move down and then a correction, an impulsive move down, a correction. And it looks like we're on the final part of what looks like to be a wave C. So the next question is, what would give us confidence to say this wave C is confirmed and is likely the low is in, and we should see the market continue to an upward trend over the coming weeks, Well, we're looking for something called a pattern reversal signal. And there's two real ones that I'm really paying attention to. One is a wave overlap, and then another is a swing high being exceeded. Like, what does that mean? Well, what we're looking for is for the price action, which also represents the buying and selling behavior, so the crowd to reflect to us that the buying is in. So what would be some strong confirmations? Well, one would be that it closes in this range. It's called the wave 3 range. And better yet, exceeds this, what we're calling a potential wave 4 high. So it's a swing high. So if the price over the next few days goes above this high over here, that gives us a lot of confidence that this low is about to hold. Now, what I want to do with AVAX, because we are focusing on 2 degrees of Elliott wave counts, looking at this by itself with just Elliott waves is not strong enough. It's strong. It's better than what most people do, to be totally honest, but it's not strong enough. We can do better. And it's the reason I've actually drawn in these lines. I cover it in more detail in the 4 Secrets Masterclass because we want to get something called a confluence of events. So the Elliott wave patterns look very, very obvious. But if we can coincide that with some of the other elements like momentum, pattern, price, and time ratios, all of a sudden we have 3 or 4 things indicating a reversal. And that's what I cover in the masterclass in a really layman's term way. So it's great for not only advanced traders, but also if you're a novice. It's a great introduction to the whole training with the top tips. So when I'm looking at this, I won't go into detail today, but we are in a Fibonacci price zone of a typical wave C, and we are in a typical wave or Fibonacci time zone. In other words, we're due some type of movement to the upside. But I want to just bring a couple of things to your attention. I use momentum indicators, and what this tells us at a snapshot. Don't worry if you're new to momentum indicators. Let me just get rid of the price data again so it just looks a bit cleaner, a bit more, pleasing to the eye, so to speak. What we want to notice is that when this blue line crosses above the red, it tends to coincide very nicely with these lows. Blue line above the red, it's not perfect, but it tends to coincide with this low over here. This one was better for this low. So it gives us an indication of the momentum of the market. So we can look at where is the immediate momentum, which also measures the rate of change. And it can help us identify price lows and price highs. Even with the highs, if you look at when the blue line went below the red, we can see that it was over here. So what does this tell us? Well, it tells us in the dashboard, it tells us that the downside is limited because we're strong oversold. And what that basically means is both of these indicators are in the lower quadrant, which tends to coincide with these lows. So now, when I'm looking at this, we got something called a wave 5 over wave C, which is this pattern position, blue and the red lines. We've got our momentum in the oversold zones, which is also reflected in this dashboard. And on the next bullish reversal, basically what that means is over here, if I just even make it bigger and you can see it. When this blue line, and it'll probably be the next couple of days, if I just draw it like so, when this blue line goes above the red, it'll be something like this. That's called a bullish reversal, and it tells us that the momentum has reversed. And that will quite frequently coincide with the price. But when you've got pattern, price, and a momentum reversal, that can be very, very powerful information. Now, the only thing that I'm on high alert for with Avalanche is the higher degree of momentum. Now, this is a bit advanced, but I just want to cover it just so you're aware of it. When I look on a weekly chart, the weekly momentum is not oversold. So we just want to be aware of this, that it's suggesting it might be another 1 or 2 weeks of sideways to down, but not all markets are perfect. We got pattern, yes. We got price, yes. We got time, yes. We got daily momentum, yes. But the weekly momentum, it hasn't flipped around yet. So that's the only thing where we might want to just be a bit cautious. So maybe let the market prove itself. We can say to the market, prove yourself to me that there is a reversal happening, and what that would look like. If I just bring back what we said earlier, and this goes back to pattern, is we could patiently say, even this swing high would be sufficient. We could patiently say, right, we're expecting the market to turn around, but let's be patient and let it turn around and let it take off, and then look for the first pullback. And at this point over here is likely that the weekly momentum will be oversold. So we might miss out on this if this occurs, but this will be much higher probability when the weekly momentum's in play. Because what's likely to happen with Avalanche, if we just look at it independently from any other market, mainly thinking of Bitcoin, is typically what occurs after a 5 and a 3 is a continuation of the former trend. And if I just show it to you like this, let me show it to you like this, right? So we got this, it's going to summarize. We got what looks like to be a textbook 1, 2, 3, 4, 5, and then what looks like to be an A, B, C. Doesn't get much better than that. I'm telling you, this is like, if I was drawing this myself, this is literally how I would draw it. But this is crowd psychology playing out. But what typically occurs next is a continuation of the former trend. And then we'll label this, if this high gets exceeded, we'll label this as a wave 1 or A. We don't need to concern ourselves too much because waves 1 or A's, they look the same. And both next part of the movement would be relatively similar. And what you would expect, what happened on this part of the movement, you would expect an extended version of the same thing, especially if it ends up being, this is being a 2 or B. Wave 2s and Bs, they look the same, they respond the same, crowd psychology, but the next part tends to be different if it's a 3 or a C. But the first parts tend to be the same. And we're probably expecting something like this. If it's a wave C, it'll probably end somewhere here. And if it ends up being a wave 3, it'll be further extended to the upside. And this is the anticipation with Avalanche, but also other cryptocurrencies. So the main thing I want you to take away from today's video, because we did do a lot of work on this, if I just bring this back up, is 2 degrees of wave counts. Get used to looking for 5s and 3s, and then 5s and 3s within those 5s and 3s. So the key thing to take away is that waves, let me just summarize this for you, because I cover this in more detail in the masterclass, but just so you have it right now whilst it's fresh, is waves 1, 3, and 5. They tend to be called impulsive waves. Now, you can also get impulsive waves to the downside, and they tend to break down into 5 waves. And corrective waves, which in this case, and in all cases, is waves 2 and 4, tend to break down in 3 waves. And after a 5-wave sequence, whether on the upside, 5 to the upside, or a 5 to the downside, typically you'll get some type of 3-wave correction. There's a few different ones, but the most common is something called a ABC zigzag. And more often than not, wave A's break down to 5 waves, but can break down to 3. Wave B's typically break down to 3 waves, and wave C's break down to 5 waves. And this was figured out back in the 1800s, 1900s with crowd psychology, and it applies incredibly well to cryptocurrency because the emotions are so raw. People often think and ask me, Jiggy, what's driving the price? Is it because the project is so good? Is it because Avalanche as the layer one solution is going to dominate, or is it going to be a big player? Is it going to compete with Ethereum? Well, the truth of the matter is speculation. People are speculating on the price, which is beautiful for us because as traders, we can read that psychology. And again, one of the most powerful ways is Elliott waves combined with some of those other factors to really see what's likely to happen. So do make sure you check out the 4 Secrets Masterclass. It's free. Just take your trading to the next level. Also, I just wanted to let you know, I also have a free membership area where I do a weekly Bitcoin report. And we've just done the latest update on what Bitcoin is looking very likely to do. And we've just been on point and what's likely to happen over the coming weeks, which will give us a feel for what's likely to happen with coins like Avalanche. And even though there is a confluence or there's a correlation between the two, each has its own psychology because each has its own buyers and sellers, because all the buyers and sellers in Avalanche are not necessarily the same in Bitcoin and vice versa. And there's just different psychology happening, but there is a crossover as well. So if you like today's video, please do like, share this one particularly because we went into 2 degrees of wave counts. And what we're going to do is we're going to finish on a quote from my book. It's one of my favorites because repetition is the mother of all skill. I want to just loop this into our minds so we can really come from it because we are operating as unconscious beings. Neuroscience shows that we operate 95% unconsciously. And it's this: Leonardo da Vinci. Simplicity is the ultimate sophistication. So is it possible that the markets could be just simply crowd psychology where the fundamentals are already baked in? And if we can count to 5 and we know our ABC in terms of threes, and we can now put our Elliott wave lens on and we can see the market and the price behavior of what's very likely to occur, add in momentum indicators and then some Fibonacci ratios, all of a sudden you have a very powerful methodology where you can become the casino and consistently win.